Hi everybody and welcome to tonight's special event. This is 3 best trading concepts. Again, I hope I made it clear on the little slide that you saw when you signed up for this, if you did, that these of course are not, specific strategies. They're broader concepts, but I think in some ways these are even more important because these are things that stop people from being successful, I think, even when they have some good basic knowledge. As we all know, there are a lot of people who want to trade the market, whether it's to invest their own money or if it's to make some extra money day trading or become a full-time day trader. And there are impediments that stop them. Mostly, I think number one is a lack of understanding, but number two is even when you understand, there are still things that step in. A lot of them have to do with psychology and the tremendous, for lack of a better word, I guess, thrill that you can have of making a former week's salary in 30 minutes or in half a day or whatever. And it plays turmoil with a lot of people. And when you couple that with a very skeletal understanding most people come to the market with, it makes things very difficult. And as you know, I've been here trying to help people to overcome that. I understand a lot of people kick the tires for months or even a couple of years sometimes. So offer a lot of free information to you guys, and you know where to get that. As a matter of fact, the first slide here I think talks about that on the website at Disciplined Trading Strategies. There is the free stuff page there, and you can access things like prior events like you're hearing right now. If you missed this or got late or you missed the last one, generally speaking, virtually all of those are recorded and put on there. And along with that is a lot of other great information for you, from play of the week videos to miscellaneous educational videos to some videos for what I call newbies if you're very new or looking at becoming a trader. The homepage, hopefully you know it, but so you don't have to type it. I'll put it in here for you. And then once you have it in there once, all you have to type is DISC and Google will take you there after that, most likely. Okay? So with that, here is what we're going to talk about tonight. Some good topics. I don't plan on this taking terribly long. I always try to finish up at 6 o'clock, so those of you going to dinner and wherever else can plan on that without staying late, and we should be there tonight to do that as well. Here are the 3, to me, best trading concepts, and these may sound funny to you, but you have to understand, I think that there is a big difference out there, and I'm saying this spontaneously as it just popped in my head. There's a big difference out there, I think, between what you commonly see in emails to attract people to learn to trade, and when you're in the trenches doing this every day, what really makes a difference. And there are a lot of things out there that people say or advertise to attract people because they're flashy titles, and even people talking about fundamentals of one versus another, what car company's better, and all kinds of things that people get attracted to. But when you get right down to it, I know the things that stop people from making money. And number one is we need to have an understanding, or I guess I should phrase it properly. You need to understand that the only way to make money out there for 99.9% of you listening to me is through technical analysis, through charts. And I talk about that somewhat at the Introduction to Mastering Technical Analysis that I do for everybody. That was last Monday, so you have to wait 6 weeks for the next one if you missed it. But these are 3 things that I think that, believe it or not, when I go through these, I think end up stopping a lot of people from being successful. Now, the group I'm talking to tonight is probably not the brand new group. It's probably the group of people who have gotten some understanding under their belt. They've been out there trying and kicking the tires, and they've been taking some trades, and maybe they do it part-time, or maybe they're starting off light, and they just can't get past that break-even area, which to me is a real focus for me to try and teach people, because I think a lot of people kind of get to that area, and then they have a hard time getting through it. So the 3 things for tonight. Number 1, the entry is everything. I have been saying that for most of my career, and as of the last 18 months, I am just pounding the table on this more than anything. And more and more and more, the more I teach it, the more I think it helps people, the more and more I keep pounding the table on this. I'll explain what I mean. This is just the introductory titles, what we're doing, but the entry is everything. And I know some people argue back, oh no, the target is everything, and yeah, everything is everything, but the entry is everything, trust me. Simple math and probabilities are a big part of trading. The charts give us the basis to use the above. I'm not sure if that makes sense. This is going to be the hardest one for me to explain, and unfortunately it's also the one I'm going to be able to provide the least information for, because For all of these, you're going to see a slide in a minute that says there's a basic understanding you have to really take advantage of any one of these. And this is a tough one, but I want to give you the examples and show you what I mean when I say that. Does that make sense? I want to get you guys, you guys are going to be participating a lot tonight. I'm going to insist on it. I have a lot of questions to ask you. I want to get some feedback. So to start with that, does that make any sense at all to you, just off the rip there? That one of my 3 biggest trading concepts is that simple math and probabilities are a big part of trading. And to some extent, I want to be careful when I say this because I don't want to give you the wrong idea, but to some extent, they're more important than perfecting chart knowledge. I think people sometimes have enough technical skill to make tons of money, and instead of working on the things they need to work on, they try to go from 85, let's say, to a 95% technical knowledge. Does that make sense? Or does that describe any of you? In other words, you're pretty good with charts, you're breaking even, you're not quite making money, and you think the answer is to keep pounding the table trying to learn that last 10%. Now, I'm not against learning charts to perfection. That's great. But do you all understand that even if you know charts perfectly, you're only playing probabilities? I don't care how good you get at it. If the game is I'm betting the dice is going to be 1 through 7, not 8 through 12, you're going to win money like crazy, right? But it doesn't mean you're not going to have a lot of losses along the way. Individual losses. You're going to roll 8, you're going to roll 10. I don't care how hard you work at it, how you throw the dice, what you do. You only have certain probabilities and you can't get beyond that. And a lot of people focus on the wrong things. They have enough technical knowledge to learn, but the question is, what are you doing with your knowledge? What are you doing with your knowledge? Yeah, the reason I put the question, if you're listening on the video, is I understand probabilities. What are you referring to about simple math? Well, simple math and probabilities. I put the word simple there, Kelly, because I don't want people to think that there's complicated math involved in trading. I've said many times, and I will continue to say, that the actual brain processing power you need to trade in terms of math and concepts and understanding technical skills is that of a 5th grader. It really is. I don't think anybody could argue with me on that, right? Anybody want to take the other side of that argument? You want to tell me what we do that requires the actual computing power beyond a 5th grader, 6th grader? You know what I mean? It's just not there. It's not where the problem lies. The problem lies in other places. And then the third one, I also have to have a catchy little title out there. Hand grenades are better than BB guns. do you know what that's going to be about? That's one of my favorites. Hand grenades are better than BB guns. It's the way I trade. I trade with hand grenades, not BB guns. And if you're making a ton of money with BB guns, I like the BB guns once in a while. If you're making a ton of money with BB guns, congratulations, just tune out for this section. But for 90% of the people, you're trying to use BB guns and you should be using hand grenades. Okay? We'll get to that naturally. We're just on the introductory title here. Let's continue on. Introductory comments to all 3 of these sections. Number 1, there are lots of things that people have to learn along the way to get good at anything. I think we can all agree with that, right? That shouldn't be a discussion or an argument. Trading, investing is no different. Why should it be? I don't think that should be an argument either. There are things you have to learn to be good at anything. The first problem a lot of people have is they think that trading or making money in the market should be intuitive, and it's not intuitive. As a matter of fact, it's probably one of the most counterintuitive things that there is. I wanted to save this comment for the end, but it may impede your understanding, so I'll repeat it after each section. Each one of these sections, when I get done, you're going to say, wow, I'm not sure that makes sense to me. But the answer is, each one of these topics I'm going to discuss is possible. In fact, it's only possible when you really understand the language of charts. In other words, as I go through each one of these, you're going to say, yeah, okay, I see in hindsight what you're doing, but is that what you really do? And the answer is, yeah, that is what I really do. There are people here, they're in the trading room with me. You know, nobody's going to catch me lying. I never tell any lies. And this is the way I do things. And you may look and you say, Paul, that's not the way I learned it. Well, I know. You're here because the way you have learned, and I'm putting learn in quotes because I don't know what you mean by learn. If it's not working for you, it's because there are these last, little things you have to learn, I think, to really understand what you're doing. I'm not sure I phrased that right, but let's continue anyhow. Section number 1, the entry is everything. let's talk about this for a minute. What some of these topics I've hit on as I do presentations, I sometimes go offline and start talking on a topic or somebody asks a question. So you may have heard some of these comments before, and that's fine. Today I want to talk about it in a lot more detail. What is the main job of an entry? Time for you guys to participate. What is the main job of an entry? What do you think? Just talk about it. Just throw anything out there you think. What does an entry do for you, and/or what is the main job of an entry? I'm talking about, to be very specific, we're talking about there has to be a moment in time when you decide to push the button and say, I'm buying this stock right now. As a day trade, as a swing trade, as a long-term trade, there is literally a moment in time, a 1 penny difference, right? It comes down to 1 penny where you've decided, I don't care if it's a $252 stock, it just becomes a 1 penny decision you make, okay, now I'm getting in. What is it that makes that entry to you? And along with your entry, of course, usually, most people also set up other definitions at the time they get in. Like at the time they get in, most people will say, well, I'm getting in here, but I also want to set up some guidelines to define when this trade is not working. And by the way, I use the word trade to describe anything you do with charts. I don't care if you're holding it for 6 months. It's a trade to me, a 6-month trade. So what is it that, to start in the right direction? Okay, Davis, that's an excellent answer. What Davis is saying is that if I think a stock's going higher, I don't just jump in randomly in the middle of nowhere. In other words, I want it to meet some threshold of, if I'm going long, Davis, right, I want it to meet some threshold of strength to get in, right? I want to set up some little test to say, hey, at least get over that little hump, and then I'll trust you more than I do now, because I don't trust anything, right? Mark, confirmation of the direct. Okay, it's the same thing. Exactly, Mark, it's exactly the same answer. That's a great answer. Probably to go in your expected direction. It's the same answer again. You're expecting follow through. Okay, all right. So everybody's the same answer so far. It's when I believe you have a good chance to win without risking too much. Without risking too much. Now, I dislike the word risk because it's not defined. Kelly, when you say risking too much, do you mean without losing too much money? Or do you mean like if you're saying low risk to you, does that mean it has a high chance of success of hitting a target? Or does risk mean to you the amount of money that you lose? Or does it mean that overall there's good probabilities at the end of the day you make more than you lose? I mean, risk has a lot of different meanings, really. Oh, well, trades do have a chance to lose. Absolutely. I could show you that every day that you want. Every trade has a great chance to lose. Matter of fact, I'd say the average trade for the average person has a better chance of losing than winning. Absolutely. So you're defining risk as your chance of winning versus your chance of losing is what I'm getting at, right? Okay, so you're using risk as a measurement of reward to risk, basically, a shortcut for reward. You see what I'm saying, though, Kelly? There's lots of different definitions of risk, actually. Some people just say risk is how much money do I lose? $50, $500, whatever. Okay, so you're saying your entry is defining your risk to reward, which it is, right? And Stephen, who knows the answer because he's heard me say this before, he's part of the seminar program, is saying that it also helps keep you out of bad trades, which is very true. Nobody came up with that on your own, and I want to point that out to you. The main job of an entry to me is really to keep you out of bad trades most of the time. The blanks are here. Sure, for most, it sets the risk and reward. That's what Kelly said. In other words, it sets where you get in and where you're going to get out. By the way, if you're operating, and most people wouldn't think this way, but there are a lot of new people who are maybe relying on concepts that are archaic. If your concept, even as a long-term trade, is that I get out when I lose 10% of my money, please don't ever take another trade again until you get some education, because that is just a ridiculous concept. That is a silly concept. Of course, you need to limit your losses, but the concept of losing 10% of your money on a trade is just insane. You should never be in that situation. You should never be that bad of a trader investor that's where you are. Not that you won't lose, but not to have to risk that amount to make something work is crazy. But the entry is actually way more than that. I want to get into that. First of all, let me ask you this before I go to the next slide here. What entries do you know? Give me an example of an entry. What's an entry? I said there's you know, it comes down to there is a second, a penny that you decide, yes, I'm getting in. What is that to you? What is the entry? What is it? How do you define it? If you took a trade today, or yesterday, or last week, or the week before, or last month, what was the criteria for you to go in? If it's a long trade, you had to what? What did the stock have to do? Did you have to hear a good news report on the radio? Did you have to see the chart do something? What is it that defines an entry to you? What is it that makes it go over that threshold? 2 minutes after I phone. I'm glad you put joke, Kelly, because I've been known to just rip into people and tear their heads out and throw them out. No, I wouldn't do that. But no, I could yell at you for something like that, though. I see everybody typing, but nobody's hitting the enter key. So what is it? Over a reversal bar. Okay. So Marty's given me a technical concept that over the high of some bar that Marty has determined is the key bar. So, right, Marty, you're saying there's a bar out there we've been following, and you're saying that this is the key bar, and when I get over that bar, okay, a setup based on a 2, 5, 10 daily time frame. So Gabriel, your setup, whatever your setup is, your strategy somehow defines where you get in, I assume, right? Because you use the word setup, and setup is synonymous with strategy. Okay, so your entry is synonymous, is part and parcel of your strategy, is kind of what I'm getting at. It's one of the good things I wanted to get after, because you guys already mentioned 2 things I want to talk about, kind of, so that's good. Break of the key, resistance, and continuation. Okay, so that to me sounds kind of, that's, so Jackson said a good point there, and there's a fine line here between a strategy and an entry to me. I'll get into that in a minute, so don't ask. But you're saying a break of a key, resistance, or continuation. So Jackson, a $60 stock has a resistance area at $62.50. You and I agree that's the resistance area. Is your entry then going to be at 62.51, Jackson? You and I agree the resistance area is 62.50. There's no argument there. I'm just talking about the entry now. So your entry will be at 62.51? And anybody who wants to answer for Jackson, if you have a similar concept, or you understand my question, go ahead and answer. Does that mean your answer will be 1 penny over that area? Not exactly. Then what exactly is it? What if the stock, Jackson, ran from $58 to $62 between 10 and 12 o'clock, and then at 12 o'clock it went a penny over your resistance area? Would that be your entry? Depends how it gets there. James, you sound like that's almost words taken out of my mouth. I don't recognize your name, but almost sounds like that could have come right out of my mouth. Matter of fact, I say that almost every day. It's amazing. Do you see what I'm getting at a little bit? Yeah, it depends. Now, here's the big question for all of you. It depends. Do you guys have defined what it depends on and how you handle it? You don't have to answer that question on the screen, but I want you to think about it. If you're day trading now, if you're swing trading, the answer most of you would, you'd end up saying it, well, yeah, it depends sometimes. Well, do you have that defined? Or is it just seat of the pants every day, whatever happens, happens, and I hope I'm right? An example of entries, as I said, trigger events such as price movement. Well, we're right, Cully, that's the broad definition of an entry, but I was kind of getting a little more specific. Let me say this to you, that if your entries are part and parcel with your strategy, in other words, you learn a strategy that has an entry, and that's the total definition of your entry, I'd be willing to bet you anything you're losing money or having a really hard time. You don't need to answer. You don't need to get mad at me either. If you're an exception, that's great. But just think about it. If your entry concept simply revolves around a strategy to say, my entry is over the high of a base, and that's all you know. My entry is over the high of a bar, and that's all you know. I bet you anything you're losing money. I teach entries as a totally separate concept because they're that important. And to me, there's a strategy, which is the framework of what's going on. It's this big frame, if you will. I don't know how else to explain it other than frame. There's this big framework of what's going on. There's something that happens, and you decide, boom, 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 I want to go long. Then how you get into this is a whole separate study to me. There are times where people wait for entries where they should have been in the trade a long time ago. There's times where people jump in at exactly the wrong moment. Have you ever gotten into a trade? Everybody, you ever gotten into a trade and you start to suffer a little bit and you say, man, I wish I wasn't in the trade because I'd go in it now over there, over that number. In other words, I got in, and if I would have waited 5 cents, I wouldn't be in this stupid trade, and now I'd get in if it went over that nickel. You ever been in that position? Where you like the trade, it's just you wish you weren't in it, because then you could wait until it showed that next little sign of strength. These are things that I think to me are critical to learn and understand, because great strategies are meaningless if you get in so late you don't make money, or if you miss the strategy completely, or if you get in too often, too frequently, and stop out too quick. These are all the in-the-trench things that you have to get familiar with, because just basic strategies themselves, I think, are not enough to make money in the market. Let me present something else to you just real quickly. A couple of you said that, over the high of a certain bar, you would get in. Let's say as a day trader, you're on a 5-minute chart, a 15-minute chart. How relevant is the high of a bar? How relevant is the high of a bar? We move up, we move up, we move up. It's 10:24, 50, 10:24, 59, 10:25, ding, ding, ding. The clock strikes 12, we start a new bar. Is there some relevance to that? Is there any real relevance to the high of a bar in particular? Think about that. If that's the total concept of entry, there are much better concepts that go beyond that. That, again, I think are critical. When you look at trading, you look at the odds of trading or investing, you need to have everything in place, because when everything's the wind at your back and the odds are at your best, you can make money, but you can't come off of that very much. I mean, I like to use the example of the house in a blackjack casino. What are the odds of the house in blackjack? Anybody know? What are the odds of the house in blackjack? I like this example. It has nothing to do with the conversation about whether or not trading is gambling. It's not, but what are the odds in blackjack? Yeah, right. It's about 52 to 48 approximately, right? Not 55. It's about 52 to 48. That's just on average, with somebody who read the little pamphlet and kind of knows when to take hits and not take hits, et cetera, et cetera, et cetera. Okay? But what if the casino, in trying to maintain its edge of 52-48, what if it didn't decide to have cameras at the dealer tables? Or the guy watching the cameras, instead of having a guy at every table, they had one guy watching 50 tables, and nobody's really watching the dealers. And dealers' friends start sneaking in, and there are card counters that are there, and people have little cell phones they're pulling out and doing stuff, and nobody's taking care of them. In other words, what if the house gets sloppy? Do they still win? Or do they lose that little edge they have? That's the analogy I kind of like in trading. In other words, you have to be on the top of your game all the time to make money. And you can't come in sloppy. You can't come in with bad entries. You can pull it off sometimes, but over the course of a week, a month, a year, you're not going to make it if you're that sloppy all the time. Make sense, everybody? I want to show you that whole discussion we just had. To me, believe it or not, is not even the most important part about entries. Let me show you the most important part. I have, for the longest time, have continued to draw on by hand what happened to me a while ago. And I decided tonight, what's this line that just came? If the only entry you know is the one that came with the strategy, I discussed that. I didn't click the button to have that in front of you. I already discussed this. Sorry. I had something happen to me a while ago. It's like a while ago. It's almost a year ago at this point. And it still happens occasionally. But I had this happening one time that was so bad and so devastating to me. And it wasn't a big deal. It was one trade. And actually, I lost half of a risk unit on it. So it's not like it was a big loss. It was a minimal loss. But I didn't hit a target. And it just wrenched my stomach to the point that I don't think I've ever done this again. And I tell the story because I know people, other traders who are newer and not that experienced, do this all the time. And I want to walk you through it. Now, I want to make it clear, this is not the trade or the chart I actually did. It was a year ago. I don't remember what symbol it was. I used to just kind of hand draw what happened to me. But it wasn't hard to find the exact same chart. So I just went today, I looked at my screen, I found a 5-minute chart that represented what happened to me, and this is a near perfect example. It took me 1 minute to find it, okay? So I want to be clear, this was not a real trade I did today. It's not relevant. It's showing you what happened. So walk through this with me, okay? And I'm going to talk like I did this today, which is fine because I ended up taking a loss on the one I'm talking about. But I want to see if you can just put yourself in the trade and tell me if you know what happens here. Now, what happened was I was watching this setup, and you just have to trust me. It says here, assume you love this setup. It's not the issue. So the issue here is not about whether or not you love this setup or not. I'm only showing you one chart. You don't even know if you love it or not. I'm just saying, I'm telling you, I was waiting for this setup, okay? I was waiting for my entry, and my entry is way down here, and I kind of missed it. I fell asleep. You ever have this happen to you? You're looking at 3, 4 things, you look back at the one you wanted, and you go, oh my gosh, look at that big green bar, right? So, right, you with me? So I have a decision to make, right? I'm up here already, just a little short of the high of this bar, right? And the stock kind of stalled a little bit short of the high of that bar and pulled back a little bit, and I said, you know what? This stock I know is going to go to the high of the day. So what did I do? I justified this entry. How did I justify it? Well, I kind of went 1, 2, 3. That's like a 3 reward to risk, right? So yeah, I'm getting in late, but you know what? I know the stock's going higher. So I jumped in up here. Everybody follow me? I'm sure you guys, as a matter of fact, for many of you, maybe this is what you consider your normal entry. I don't know, right? Okay, so let's follow through what happened first, and then I'm going to play through what should have happened. Okay, so here's the next. So I'm coming down to a 1-minute chart. That's all I did. I just want to show you more details. So here's a 5-minute chart. 5-minute chart. Boom. You know, big green bar forms. I jump in here at the top of this bar. Okay, let's come down to a 1-minute chart so you can get the details. So boom, I jump in here somewhere. Okay, a couple minutes later. Okay, boy, a red bar, and now we're going over the red bar. That's cool, right? I mean, that's good because that's almost like a real entry in and of itself. And you know what? Maybe that kind of becomes a stop loss for me now, right? This is great. Love it, okay? Things are still okay. We're about 6 minutes later after I get in. This, of course, is a day trade. I'm trying to get this to the high of the day. Am I up a lot of money? Am I up a lot of money? Just make sure you're following along here. You're going to love this stuff, I think. No, matter of fact, you know, if I got in here and I put my stop down here, I'm like up a tenth or an eighth of a risk unit, right? If I risk $500, I'm up 50, 70 bucks or something like that. So I'm not exactly happy, but I'm thinking, hey, I know we're going to the high of the day. Just relax, right? So I'm sitting here watching, and oh, gulp. Where am I right now on the little profit monitor on my screen? Where am I right now? Where are you right now if you're in this trade? Just play along with me. Where are you right now? You're a little negative, right? I got in pretty late. I'm a little negative, right? What are you thinking? Yeah, you started thinking, man, I was green. I like this trade, but holy cow, you know, am I going to sit here and lose money on this now? You know, whatever. So I decided, well, you know what I'm going to do? When I get a little bounce here, I'll raise the stop. In worst case scenario, I'm going to get out a little bit of money, no big deal, right? Kind of like a free trade almost, right? So little tail forms, boom, boom, boom. I set my stop below the bar. I get out, small loss, no big deal. All right? So I go on to the next trade, whatever it is, blah, 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 look back. And of course, I check in an hour later, and I go, well, you know, gosh, I wish I was still in because now I put my stop down here somewhere, right? But no big deal. Well, here's the 5-minute chart. There's what it does. It gets to my target. It got where I knew it was going to go. I got in the trade. I would have made 3 times what I risked, but what did I make? I lost half of what I risked. This chart shows probably a little less than that, but in reality, I lost about half. What happened? What I just ran through, guys, is this what you would call, is this a typical scenario, or is this some goofy thing I just made? Is this typical of what happens to people in general? Typical? Worth discussing? Yeah, I think it's incredibly typical, right? See, to me, this is some of the biggest stuff about trading. I mean, you don't have to study very hard or long to find a chart like this that works. The problem I find is, for a lot of people, is that you went from point A to point B, and you weren't in it when you got to point B. All right? Let me show you why this is in the section called The Entry is Everything. Now, here's where I would get into this trade typically. Right there. Now, some of you are probably saying, all right, Paul, you're looking at a chart after the fact, and you are making stuff up. I'm going to go out on a limb here. Is there anybody that's in the room with me that would agree that I often take entries like right there? If you're in the room, it was not going to take long for you to vouch for me because I do it just about every day. Yeah, right, just about every day. And again, the point I want to make here, remember when I showed you these beginning slides and I said when I go through these three most important topics to me, they all have a prerequisite. And the prerequisite is this, is that this stuff only makes sense to you if you really understand charts, right? In order to get in there, you have to have the chart knowledge that says, dun, da, 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 that is my entry. No, the stop would not be at the low of the day. It's kind of a discussion that goes beyond where I want to go right now, James. It wouldn't be low of the day because you stop out way too much of that. But this concept will make way more money than any other alternate concept. It's what I call mathematically superior. There's that word math again. So that is the prerequisite number one, is that you have to know, and by the way, do you have to know all the charts, all the strategies? Do you have to know everything out there perfectly? No, you don't. You have to have a good understanding of all charts and concepts, but then you need to perfect a few things. You need to have a few strategies where you say, you know what, that is going to be awfully close to the low of the day. I'm in. Boom. Right. So remember, that is part of it. You have to know the chart well enough to be able to say, hey, here's a great entry, right? Sure, the entry can do lots of things, risk reward, some will be good, but the most important thing, and overlooked, it doesn't show up in your results, it's hidden. And that's this concept right here, is that when you get in good, now the chart's going to do the same thing, but think of the different mentality you have, right? When I get this big, huge green bar, you know what I do? Anybody in the room with me every day, what do I do when I get a big, huge green bar? And I don't care where the target is, I don't care where I define the target to be. Matter of fact, I usually don't define targets ahead of time. I have general concepts where it may run, but what's going to happen on a big green bar like that? What I call, no, I'm not going to cash out. I'm not going to cash out. But I'm going to take some off the table. Yeah, I call it get safe. I'm going to take some off the table. I'm going to get a third off the table. Take a third. When I take a third now, guess what? It's almost guaranteed to be a green trade. So when we start this pullback, what's my attitude now? I'm in from down here. I've sold a third already. And the part I have left is still vastly profitable. What's my attitude now? Well, I may add, but let's forget about the add because that puts me back into a stressful situation. What's my attitude about managing the rest of the positions? Who cares, right? I'm not even looking at this chart, to be honest with you. As people in the room know, what I do kind of is it's just, okay, put this one on the back burner, look at it a little bit later. My stop is still way down here somewhere. And then at some point later in the day, when I get up to here, now I put the stop down to here. I give it plenty of breathing room because I'm not in any hurry. I'm not fidgety. I'm not stressing out. I'm not telling the chart what to do. I'm letting the chart do what it does and then I'm responding to it. So now I'm up here. Guess what? I've sold a third here. My stop is profitable on the rest of this. And guess what? Do you know how easy it is to let this go to the high of the day when you have nothing but a green trade? Right? Now, notice this is the same exact chart we just went through that you could lose money on. What's the difference? There's only one difference. It's just that entry gives you a different state of mind. And I don't care how much you say you have a trading plan and how much you follow a certain management plan. A question for everybody, especially if you day trade, but even for longer term trading. If the stock is struggling to move in the right direction, but you're sitting slightly green the entire time, does that not affect how you manage as opposed to if you were sitting down a half of a risk unit? Yes or no? Does that not affect you tremendously? Your ability to think straight, to manage properly? Big time, right? And this is why, this is in the section to me, this is the biggest thing about why the entry is everything to me. Because it allows you to manage properly. And that concept is something you probably never even heard before. I'm sure you felt it and experienced it, and that's why learning and understanding great entries is critical for all the reasons I just talked about. Okay? All right, that was the longest section. The next two sections will be a little bit quicker. And I want to take about 4 minutes here for something real quick. And I have been out here talking to you guys for like a year and a half now at DTS, and all the time I do these free events. Have you ever seen me throw up a slide about, hey, join the trading room, hey, I do seminars? Never, right? Never during these free events. I make this just for you to learn and understand. I assume that you know what I do. You can go to the website. And I'm not going to do that now. I'm not starting now. But I started something 2 weeks ago, and I just want to make sure, whatever, this is more what I would call a service for you, not something, that much different from me. This is about, I'm going to run through this in just 2 minutes, and in the future I won't even need to, because it'll be on the website, but until it is, this is simply about for those of you who are day trading only and want capital to day trade. I've waited 18 months to present this. There's a rule out there that some of you probably know very quickly, that for day trading you have to have $25,000. There is an answer to that. If you need $25,000, you don't have it. It has led to some bad things for people. It has led to people, forcing them to swing trade only, which is a terrible idea. I have a video about that on the website, on the free stuff page, if you haven't been there, that discusses why I think that's a bad idea. The swing trading time frame is a very difficult time frame. I don't mean long term. Long term is great, but I mean the literal swing trade, holding 2 to 3 days. Very, very, very difficult time frame, and it's what most people end up doing if they don't have the money to day trade, and it puts you in a very bad spot, because you lose a lot of confidence trying to learn how to do that. There's a video about that if you want to read it, if you want to listen to it, in the educational section. And some people then go to trade futures. Now, there's nothing wrong with trading futures if that's what you want to do, but trading futures because you have no choice often doesn't work out well for you. Trading futures is fine, but if that's all you're going to do, there's one huge disadvantage. What is it, somebody, quickly? And I like trading futures. It's great. I'm not going to knock it at all. And you get huge leverage, and you don't need $25,000. I mean, there's an answer for you if you want that answer. You can throw $5,000 in the account, trade a couple of contracts. But what's the big disadvantage of trading futures? It's such a disadvantage that I can't do it is the only thing. I can't do it. What's the disadvantage? Yeah, you're trading one thing. One thing. There's one chart you're trading. Now, I know you could trade cotton and whatever. That's fine. But I mean, most people end up trading the S&P futures or the NASDAQ futures, and you're trading one chart. And if you miss it, you miss it, and you have to have patience. And it takes a really awful lot of patience to do that. So don't be forced to do that if you don't need to. The answer, I am going to have work with an affiliate company that I announced that is going to have a program set up for you. I'm not part of this company. I just want you to know that, and I'm going to ask you to sign off on that before I send you anything. But it has all these advantages here. You have 10-to-1 leverage, 95% payout. You can have it up. You can be up and running in like a day after you do the necessary paperwork. So you can be up and running in 48 hours. You do not need tests. Your money is 100% safe. It's in Chase Bank in New York City, FDIC insured. Huge thing. You have it's the Sterling platform, and you're trading your real money. If you want to go through and lose all your money in a week, you can do that. So I just want to throw that out there. Email me if you want information on that. And you are all big boys and girls. I know a lot of people in my position make you take some kind of seminar program, like as a entry fee to this. I'm not making you do that. But there is a little bit of a program available to you, a combination package here. If you want to do that, $6,000, $30,000 buying power, and all the benefits I just explained to you, and you get the full DTS seminar program. Okay, so I don't want to spend any more time on that right now because we have stuff to do here. Email me if you have any questions. I just want to make sure that you were aware of that, so I can get, it's not really been advertised at all anywhere yet, so I'm just throwing that in there. Okay. Next section, math and probabilities. Did I forget to say something about that? I don't think so. Math and probabilities. Don't those dice look like they're just jumping out at you there? Math and probabilities. Question, and when I did my last presentation, somebody asked a question. I got a little bit into this topic. Thanks, Kylie. I got a little bit into this topic. Okay. So let me ask a couple questions here. What is the minimum reward to risk you would ever take? What is the minimum reward to risk you would take? What is the guideline for you? In your plan, if you're not really trading that much yet, what have you heard? What would you set up? What is the minimum you would want to have as a reward to risk? Most people say risk reward, but actually when we say numbers, we're always phrasing the number as reward to risk, right? If you say you made a 5-to-1 trade, it's reward to risk, not risk to reward. Give me some answers, guys. What do you got? Depends on the type of trade. That's a good answer, Adam. 2-to-1 minimum, 1-to-1 minimum. I think some of you started to listen to me and you're taming your answers down, but Give me some more answers. Just a serious question. It could be whatever it is. I mean, there could be nothing wrong at all with having a 5-to-1 minimum reward to risk. That can be a great trading style. It really can be. It requires a certain person to do that, and you have to hit those numbers, but it can be a great trading style. It really can be. 3-to-1 is the minimum that you need. Okay. Here's why I ask that, because I want to just get your mind open to a few different things. Let's say, a 3-to-1 is a very common answer right here. Well, credit spreads are totally different. Yeah, credit spreads, you can go with a very low reward to risk because you're getting 80% of them right typically, right, Adam? So so I'm not counting options. You see, options already absorb the reward. It already skews the reward to risk. So, but anyways, let's not go into that. What is the negative? If you're going for a 3-to-1, that's a nice reward to risk, right? I think we'd all agree. If you're risking $500, you make $1,500 a trade. That's a nice reward to risk. If you're holding out for 3-to-1 all the time, what is the negative about that, though? Let's talk honestly. What's the negative about going for 3-to-1? In other words, the higher reward to risk you require, the what? What's the negative that starts building? There's the question. What's the negative? Right. Well, finding the trades is going to be harder to find, and you're going to lose more trades too, right? I mean, if you are holding for the bigger targets, you're going to lose out on more trades, right? You're going to have a lower batting average in others. In others, there's always a trade-off in trading, and whenever I teach, I always go through this real quickly, but there's always a trade-off you can never avoid, and that is security versus profitability. Or, in other words, phrased another way, the likelihood of stopping out versus the money you make. Or, in other words, reward to risk. You can always skew one in favor of the other, right? But the more you try to hang on for the bigger target, the more you're going to have some losses, right? What do people often do when they have a 3-to-1 trade and they realize, boy, I'm getting, I stopped out. What starts to happen? You take a 3-to-1 trade and you say, okay, I'm going to make $1,500, but you lose 500. All right, I'm going to make $1,500, you lose 500. And so you're down $1,000, and the next trade starts to work. What do? What do people typically do when the next trade starts to work? They start saying, yeah, you know what? Right, Mark, if I just kind of take this now, it's halfway to the target, that's 750, I'm almost break even again. And I'll feel pretty good about that, right? Guess what? That starts a process from which you never exit, correct, everybody? Anybody want to testify that that is a very true statement? Right? Once you start that process, you actually set up a system by which you're almost guaranteeing a losing record. Because you're always playing catch up. You're always saying, okay, I'm losing, and if I can just get back most of what I lost, I'll be happy. Well, trading, investing should not be about getting back most of what you lost. Right? It should be about making money, aggressively making money. I put the word aggressively in there because I think it needs to be in there sometimes. Good trading involves some aggressiveness. Why do you have to be aggressive? Well, you should know the chart well enough that you should be able to say, hey, that's it right there. That's what I want. That's what I'm doing right there, right then and there. And you know what? If you're wrong, there is this thing we have called the stop loss, and it prevents you from losing too much. And that's why you don't have to worry about, you're not working without a net. You have a net already. You don't need 3 nets underneath you. For those of you that say 3-to-1 is the right answer, here's a big question that really makes you scratch your head a little bit. What is your Sharpe ratio at the end of the month? Now, your Sharpe ratio is, in essence, it is your after-the-fact reward to risk. In other words, it's what is your average winner compared to your average loser. In other words, if you always held every trade to either get that full 3-to-1 target, $1,500, let's say, or you take the full 500 loss, at the end of the month, your Sharpe ratio would be 3. It would be 3-to-1. It means that I successfully completed making all of my trades to either the 3-to-1 target or a loss, one or the other, right? So for all of you 3-to-1 traders or 2-to-1 traders, how many do you have a Sharpe ratio that is close to 3-to-1? I'm going to venture to say 0. Let me ask you a simpler question. How many trades do you have, single trades that actually make 3-to-1? In other words, if your goal is always to take 3-to-1 trades, if you look down your records, here's a real question. Again, you may not want to answer it, but how many trades are $1,500? How many? I'm going to venture to say not a lot. Now, don't get me wrong. Nobody loves a nice reward to risk trade better than I do. But there's a right way and a wrong way to do it, and most people end up doing it the wrong way. In other words, they force the reward to risk on the trade. They don't read and understand the chart as to what the chart could offer them. They force it on the chart, and then when they don't get it enough, they just start over managing, and you could end up, in other words, right here what the slide says, in the worst of both worlds. You know the saying, I'm doing the best of both worlds? A lot of people end up in the worst of both worlds, because the more you're taking these higher reward to risk trades, the less successful you are. But that's okay if you make those 3-to-1 targets, but then you start over managing, and now you have low batting average and you're not getting the high reward. Does that make sense to everybody, what I'm saying? Does that make sense? At the very least, and again, I don't know any of you, hardly any of you. I can't tell you what you're doing. Most people are usually shocked. I get emails saying it's like you're looking in my trading account or you're in my head. It's just because I've been doing this a long time. I know what the pitfalls are. I know what the problems are. I'm willing to bet that most of you are in this pitfall right now. It's just something that happens. And yes, you have to work around it. How do you work around this specifically? You work around it by really getting to understand the charts well enough and understand great entries so that this becomes kind of a moot point. Unfortunately, on this section, this is like an all or nothing thing. It's hard, other than conceptually tell you how important this is, it's very difficult to go into the examples because it's almost the end product after you understand everything is about charts. I'm not sure that makes sense or not. Does that make sense? No, this is not something like I can tell you is a prerequisite to understanding charts. This is what you do after you understand charts. So it's very difficult for me to, show a chart or a trade or details about what this is. You just need to understand that the math and probabilities are very important. Now, for those of you that are, just kicking the tires for a long time, the number one book I like people to read is called Van Tharp's Trading Your Way to Financial Freedom. It's a great book to read, and I've written 2 books, and I don't even tell you about those because I don't care about them. The book I think you should read is Van Tharp's Trading Your Way to Financial Freedom. I had somebody once, after a presentation like this, I suggested that book, and he emailed me. You know what he said to me over the weekend? He said, I started reading that book, and I got about halfway through, and I got so bored I had to put it down. You know what I emailed back to him? This is truth. You know what? Take a guess what I emailed back to him. It was 2 words. No. Yeah, sound is fine. What did I say to him? I said, quit trading. Yep, that's right, Jerry. Stop trading. Only 2 words. That's literally all I said to him. That was the whole email. Stop trading. If you think that book is boring, stop trading. Because as I said in the last presentation, I made this. Actually, it was on the Monday intro class. I made a comment that not everybody, believe it or not, at the right level consciously wants to make money. A lot of people want to be entertained, and that's what this guy was. He's all about the thrill of show me these strategies and blah blah blah. And he didn't want to bother with the stupid little details about money management and probabilities and some of the math that goes in. When I say there's math, don't be scared. Again, like I said, we're not talking about differential calculus. We're talking about math, percentage, adding and subtracting, but understanding it in a way that you need to. This is a huge topic to me. Get to understand it one way or the other, however you do. And again, I'm talking to people who are, not looking to take any kind of courses for a long time. If you're going to go out and kick the tires and do some trading on your own, learn to understand this. The book is a good way to start. Most traders wait way too much for confirmation when they don't have to, and then there's times where they wait when they don't wait when they should be waiting. And to me, this is one of the critical things. I teach entries as part of as a part of a whole separate topic because they're that important. We spend like a half day on it. And to me, for all the reasons I went over, it is virtually everything. This problem comes from typically not knowing the chart and how to act accordingly. Last one. Hand grenades are better than BB guns. This may shock some of you if you are, well, I can't even say newer to trading. Unless you're been around a long time in trading, you may not even know that the market used to trade in fractions. Some of you probably don't even know what that means. It means halves, 3/8, a quarter, 3/16, a 16th. It means that if you were in a stock like Qualcomm and you set your stop loss to stop out under $38 or whatever Qualcomm's at, I don't even know today, that you would likely get filled at 37.75, and that 25 cents was not even slippage. That was the best fill you could have, because the next level below 38 was not 37.99, it was 38.75. What do you think about that if you're not aware of that? Is that news to anybody? Maybe you heard stories about fractions in the past, but is that amazing? Let me say that again. When you stopped out at Qualcomm at 38, you didn't get filled at 37.99. Because my point of this is, right now people are like, oh my gosh, it went down to 37.97. It's not holding. It's breaking apart. It's falling apart. The stock is crashing. 2-3 cents. It used to be 25 cents just to get filled at the appropriate level. Also, there are things out there called dark pools, invisible bids, high-frequency trading machines. What's the point of this whole section? What's the point of all this? Maybe you're starting to understand what I mean by hand grenades and BB guns. What's the point of this section I'm getting to? Again, it's a big thing. When I hear from somebody, go ahead, give me your comments. When I hear from somebody, sometimes I'll hear from somebody by email. Like after a presentation like this, they'll email me, and I don't know them. They're not subscribing to anything, and they'll give me this blanket thing like, oh, I've been day trading for 3 months and I'm losing money like crazy. What should I do? They literally ask me that. What should I do? Well, I think on your last trade on General Motors, you should have put the stop under 27. I mean, they sent me no records, nothing. Just what should I do? Well, believe it or not, I have advice for them, and that advice relates to this right here. What are your comments? Don't split hairs for a few cents. You're talking right. Well, it's just that. Is that you can lose the forest. I know there's a forest in there somewhere. Don't lose the. Is that the expression? You can often be looking at the trees and miss the forest. Here's something I learned. And it's scary for me to say this, but 19 years ago, my first year of trading. Yeah, it's sort of art, but also it's the whole hand grenade thing, right? Close only counts in hand grenades and horseshoes, right? Let me give it to you on a chart what I meant. This was literally something that happened to me 19 years ago. And it's a lesson from which I still revolve around and have formed what I do upon. And I even know the stock. The stock was Adobe. And this was it was my first year of trading, and I was weird. I had a good first year, pretty good first year. It was weird. And amazingly, I wasn't a whole lot different than I am now. I took a trade on Adobe. I took it around 10 or 11 o'clock in the morning, 10:30, and I left for the day. I remember I even know where I went that day. I remember where I was. And I took the trade down here with the expectation I would be up here, right? When I come back, guess what I saw? I saw Adobe was up here. Guess what else I saw? I saw that I was not in the trade. Yeah, because before I left, the stock made a little pop, kind of pulled back, started a rally again. I said, okay, you know what? If I put my stop there, I have nothing at risk. Well, what the stock did was the market had a little hiccup and whatever, and it came down. It stopped me out by 2 or 3 cents. This is a $30 stock at the time. And boom. Right? So I broke even on the trade. And I lost about a 3 to 4 day salary by doing that. What's the lesson here? Well, there's a couple lessons here. Number one was the fact that amazingly, I have the same attitude today, and I think I learned it, from this day. I went through all this work. In other words, it hit me. I went through all this work of finding a stock, looking the night before, looking that morning, sorting through a bunch of stuff. I took 2 or 3 trades. This was the trade of the day for me. Boom, boom. Well, this is what I wanted to do. This is fantastic. Everything's great. And all you needed the stock to do was go from point A to point B, right? And then some stupid little part of me jumped in and said, well, you don't really want it to go to A to B. Let's step in there and put a stop in there so tight that you're not gonna necessarily make it. There's a saying out there that missed money is better than lost money, right? You heard that saying before? I'm gonna even type it on the screen. Missed money is better than lost money. What do you think about that saying? What do you think about that saying? Oh, it's not wrong, Scott. It's not wrong. I'd be kind of guilty myself because I've said it before. I've said it to students before. I've said it to people before. There's some good logic to it in a sense. I mean, if you look at that saying as meaning, don't just take any piece of garbage that gets in front of you and be more particular. Great. That makes sense. And that's why to new people it's something that's taught. And also remember, new people tend to overtrade. They tend to lose money. And the more I can instill in them the ability to be more demanding and specific of their trades, that's great. But there's another side to it too, right? There's another side to it. And yeah, Callie, you're kind of saying it, right? Is that once you're good and you know what you're doing, things start to change, right? Once you are no longer worried about trying to minimize your losses because you're a good trader, you start to worry about more maximizing your gains. And when you start to get particular with your trades, if you miss a trade because you weren't there, because you fumbled, because, if it's an accident, that happens. But if you just didn't pull the trigger when you were supposed to because you just cheesed out, that's not a good thing at all. Because losing a week's salary is not acceptable. You know what I mean? If you, during the day, we all theoretically say we want to take nothing but the perfect trades. Okay? Well, that's a lot of crap because it doesn't happen. You can't take. As a matter of fact, I did a whole presentation on this topic. I forgot what it's called. But if you go through all the stuff that's recorded, you'll find a whole section about is taking perfect trades the way to make money? And the answer was no. Theoretically, sure it is. But the thing that I like to teach people is that perfect trades are subjective. And number two, what if your perfect trade comes up once every 3 months? What are you going to do? Number three, we have to learn to make money from the average stuff that we have to deal with every day, right? So throughout the trading day, I try to take nothing but really good trades, but there's some trades that I'm like, okay, this could work. I like the odds. And there's some trades that are like, wow, no question about it. And they only come up a couple times a week, right? And if you miss one of those trades where it's like your bread and butter, and don't miss that trade, that's bad. That's to me is worse than taking a stop on something. So for what it's worth, what is this whole hand grenade BB gun thing mean? It means that both in terms of your entries and your targets, the chart is not that precise. We learn to read areas, and here's where I'm starting, here's where I'm ending up. If that happens, I better be in the trade because it's too much time, experience, work, and everything else to find the chart that does that. And to throw it away for a stupid reason is not good. Now, I'm not going to say you never get out of something that eventually hit a target. There's times you have to. I understand that. But you need to evaluate very closely because it shouldn't be all that often. And the chart I actually pulled up here, because I didn't have the chart from 19 years ago, surprise, surprise. The chart I actually pulled up here was a chart from yesterday. And I just want to show you how you could have screwed this up. This was TRXC from yesterday. And this was a little bit of an awkward trade for me. This was one of these trades I got in for me extremely late because this was a gap down that was an unclear gap. I felt that if it caught and it rallied really quick, and my attitude on this is kind of like what I said about a 1-to-1 ratio. It means I didn't know how high this would go, but I felt for sure this would have a good move. I was very confident. So I got in this late. I got in up here somewhere in my stop down wherever. And it moved higher. But my point is, though, that if I would have played this too close, I could have stopped out there. Here, it went under this prior pivot. It could have stopped out there. And both of those would have prevented from getting to the ultimate target. Now, my middle target on this was a 2-to-1 move, so it had a really good move. Overall, it made about 1.5, a little less than 1.5 to 1. So overall, the trade was great. Not what I liked for an entry, but I felt that the chance of moving up higher were great. But if you overreact, overmanage, if you think that you're trading with the BB gun and that you can take all these stops to the penny along the way, it's just not going to be very effective for you. Again, another big part of what I teach I don't want to say I teach, but a big part to me that you have to learn to understand is how to manage stops properly. If you think a stop loss is, I got in here, here's my stop, boom. Again, one of the biggest money-making things I ever started doing for myself a long time ago is the concept of managing stops properly. It's a phenomenal concept. Did I miss any of your questions? It's 5 after 6. I'm at the end. This is the last slide. Let me know if you have any questions. I don't think I missed any questions, but if I miss one, please retype it. Around at the bottom, I don't see any questions here. Let me know if you have any questions. Does anybody have any questions about the stuff I presented today, the 3 concepts? I think you probably always get a little bit of surprise when you come to the stuff I teach because it's probably always a little bit of a mystery what I'm going to talk about. But to me, these are 3 really big concepts of trading. And again, it's universal. I don't care what you learn to do in terms of a strategy. You can even learn a strategy I think is pure garbage, but if you learn how to properly use the information you have, even a strategy that isn't even really a strategy, like a head and shoulders pattern. Yeah, I know it works, but you can't make any money using a head and shoulders pattern, not at least the way it's taught. But even a head and shoulders pattern, if that's what you want to use, if you learn to properly handle the information you have, improve what you do, and continuously work on it, you can make money doing anything you want to do if you do it properly. And to me, these concepts today are the things that really make you money. Yeah, you really need to learn how a chart you really need to learn how to read a chart. That's critical. And the better you learn it, the better you're going to be. But at some point, it comes down to these other topics a little bit. Does that make sense at all, everybody? Can I get how about any feedback at all about how helpful tonight was, or the topics are, or whatever you want to say? Because I know in some ways you may think, gee, did this really hit the nail on the head of what I wanted to learn? I don't know. But to me, this is the stuff that ends up making or breaking people in one way or another. Very helpful. Okay. I'm not looking for compliments. I'm looking for, whatever it was. It was like, hey, I fell asleep. I just woke up. What are you talking about? All right. Well, I'm going to give a last call for questions. I don't see any questions out there. That either means you slept through it and you don't know what I'm talking about, or I covered so completely, wonderfully, and accurately that you have absolutely nothing to say. I'm going to leave this slide up here, just the FYI, and just email me about that if you have any questions. Okay. I'm late for dinner, so I'm all excited to get out of here too with you guys, right? Can you summarize the hand grenade thing you want to say? Yes, Kali, I can. And to do that, I will go back to this slide. That I want you to think about the goal we have as traders, investors, Kali, and that is that I've determined based on my strategy, whatever it is, it's the ipso facto double Heimlich maneuver strategy, that I should be getting in this play around here somewhere. Somewhere. I don't know where. Somewhere. And it has the potential of reaching this here somewhere. Okay? And let's not worry about the pennies along the way, right? Let's be smart and manage in a way that, and again, this is all very personal how you want to manage. I personally have a way I do it that helps me get to bigger targets, but don't get nicked out by pennies and leave the dollars on the table. There's ways to avoid doing all of those things. There's ways to do all of those things properly and avoid doing all those things properly. Most people never learn those because they're all hung up. So don't, miss the forest for the trees is what the saying is. Don't miss your $2 target because you're trying to save 3 cents on a trail stop when you're already up 100, 200, 300 bucks. Okay? All right. Okay, guys. Have a great one. We'll see you next time.